Hey everybody, it's Brian Shannon from AlphaTrends.net. Today's Friday, the 30th of July, 2021. The markets closed kind of mixed, I guess you would say here. It's surprising that the semis were up 2.25%, but the NASDAQ was down 1%. Other than that, it was kind of quiet. We're holding on to great gains for the year, so let's take a look at the charts and make some sense of it. Here's the S&P 500. We're clearly still in an uptrend. This prior little band of resistance is holding as support. And we are seeing that again we're above a rising 20 and 50-day moving average with a pattern of higher highs and higher lows. We did lose a little bit of ground here, today, and that brought us below the 5-day moving average, which is now declining. The next level of importance that I'm looking at is right down here at about 436, and then at the conjunction of what is the month to date volume weighted average price and from that gap lower. Those come together right in here at about 433 and a half. So keep that level in mind for next week. And if we were to break below those levels, well then that's what I will update subscribers with every day that I do this analysis at alphatrends.net. The NASDAQ, as mentioned, lost a little bit of ground here. It's still holding on that rising 20-day moving average, and over to the 30-minute time frame, it's below the declining 5-day moving average. So that means a little bit of caution. If we're to break below this week's low, then that might open the gates for a little bit further profit taking. And one level to be aware of would be these volume weighted average price levels. You can see that we anchored it from this June low, and then it was handed off here as it touched. That would bring us down to about this 356 level. It's a possibility. The primary trend, of course, remains higher. If you look at the weekly chart, there's nothing bearish about that. So keep those levels in mind and see if they hold as support. We don't want to buy blindly against any level during a pullback. You want to wait for evidence on the shorter term time frame that the buyers have in fact gained control. The Russell 2000 continues to linger near the year-to-date volume weighted average price. That's that solid thicker blue line right in there. The thinner blue line is the 20-day moving average. This is the 50-day moving average. And, we saw the volume weighted average price from the November low is where we got the bounce 2 weeks ago. Now it's just kind of, again, stuck in the middle of this range that we've been involved in for the last several weeks. Today we broke back down into this little level. So I had been looking at this little band of resistance, thinking if it could hold above there, maybe it's going to, push up towards the 20-day moving average and higher. But again, when you look at the daily time frame, it's just kind of stuck in a range. So there's really not a whole lot of point to looking at the shorter term time frames to make something of this bigger mess that it's, just range bound market. Semiconductors, new all-time closing high right there. It pulled back just like we wanted to the 50-day moving average, and then buyers came in and gained control. It broke this little resistance on Thursday, and we're seeing that the buyers remain in control. AMD has been just a monster here this past week. Today, Alpha Trend subscribers got involved in Applied Materials, and that one looks like it could be heading, continue to head higher as well. The biotechs, they're still in an uptrend. They're still showing the higher highs and higher lows above the rising 50-day moving average. It's just been a choppy range. And as mentioned last week, when you look at IBB versus XBI, you get a completely different picture when you talk about biotech. So you have to be aware of which group you're talking about, the XBI or the IBB. And looking at the components can help you with that. The financials are still stuck below that declining 50-day moving average. This is where we were 50 days ago. So, we're still going to be averaging in higher data unless the market gets above that 37.10 level and holds above there. If it holds above there, then perhaps these financials can make another leg higher. But for now, they're just kind of stuck in a range. Let's look at the 65-minute time frame. And again, this is the bigger level that is also where we see the 50-day moving average. So we're looking at 65-minute time frame here, 6 equal candles per day. In the daily time frame, so we're just zooming in on that. Basically neutral for now, but getting back above and holding above 37.10-ish, I think would be bullish for this group. Energy names continue to be just generally weak overall. I mean, they're in a downtrend as defined by the declining 20 and 50-day moving average. If you look at the very long term with the 200-day moving average, well, they're still in an uptrend. So what's your time frame? My time frame is a swing trader. I don't see any advantage to being involved in here. You can see that the July volume weighted average price for the month is where we saw sellers. So there, that level was defended by the sellers here on several occasions, and again on Thursday. So if we pull back down next week, I think you want to look at the volume weighted average price from that low. And if that fails to hold in a significant way, then it could be that the financials are heading down towards the 200-day moving average. I mentioned on Twitter that Tesla didn't seem like a good place to be buying up near this 690, 700 area, simply because the year-to-date volume weighted average price. And I also keep an eye on the volume weighted average price from the high, but it hasn't had much significance. It's gone back and forth above and below that on several occasions. So to me, the more important volume weighted average price is the year to date, because that's exactly where the sellers are showing up. Why are they showing up there? Is what someone might ask. Well, think of a large institution, or maybe there's several institutions that are saying, listen, we're going to sell our Tesla stake in 2021. We don't want to sell it way down on these large sell-offs, but if it comes down to the average price it's been at for the year, then our traders are going to let some supply out there. That's why it finds resistance. Now, at the same time, since that low just about 51 days ago, the buyers on a shorter term time frame have been defending the volume weighted average price off of that low right here. So we have mixed messages from different time frames. Now, when I look at the longer term time frame, the weekly time frame, we're still in a primary uptrend. So I look at this and say, what's most likely? Do I want to be a buyer? And here's why I didn't want to be a buyer, because we just rallied from 630 to 695. We just rallied 10%. And typically, after a quick 10% rally like that into a level that's been significant, you typically see that it'll pull back. Now, the bullish scenario for Tesla is that maybe it pulls back down towards this level, carves out a higher low, and then it has the energy to sustain a breakout, because then you can put your stops under here. It makes it a much lower risk entry point. These are the types of trades I talk about all the time at alphatrends.net. If you haven't taken a trial, feel free to do so. Have a good weekend. Thanks for tuning in.